If you have searched for information about why banks sometimes delay or question withdrawals, especially amounts around $10,000, you may have noticed something confusing. Different websites explain it in different ways. Some say it is a tax issue. Others say it is about fraud prevention. Some even suggest it depends on your age. The reason for that confusion is simple. This topic involves more than one rule working together at the same time. So today we are going to go through exactly what is happening when a bank holds or reports a withdrawal using the actual IRS and federal banking guidelines and explain it in plain English so it makes sense. I am Andrew, and I have spent time going through the official IRS and banking compliance guidelines related to large withdrawals. Everything here comes directly from irs.gov and federal financial regulations. Before we get into this, if you find this kind of plain language explanation of financial and retirement related rules useful, subscribe and turn on notifications. Each week, this channel takes one confusing topic and explains it step by step in a simple way. Now let us get into how this works. The most common misunderstanding about this topic is that banks are limiting withdrawals or taking action specifically because of the amount, especially the idea that you cannot withdraw more than $10,000. This misunderstanding is understandable because people often hear about a $10,000 rule and assume it is a limit, but here is how it actually works. The $10,000 number is not a limit. It is a reporting threshold. Banks are required to report certain transactions over that amount to the government. That does not mean you cannot access your money. We are going to go through exactly what triggers that reporting, what it means, and why it sometimes results in delays or questions. To make this concrete, let me use an example. Consider someone like Walter. Walter is 68 years old and lives in Arizona. He is a retired electrician and receives Social Security benefits along with some savings he built over time. Walter went to his bank to withdraw $12,000 in cash for a home project. During the process, the bank asked additional questions and took more time than he expected. Walter believed that the bank was limiting his withdrawal because of the amount. Here is what was actually happening. Because the withdrawal exceeded $10,000, the bank was required to file a report under federal law. This did not prevent the withdrawal, but it did require additional documentation. This situation is not unusual. Many people in Walter's position experience the same thing, and understanding the rule explains the delay immediately. Let us start with the foundation. The rule most people are referring to is called the Currency Transaction Report, or CTR. According to the IRS and Financial Crimes Enforcement Network guidelines, banks must report any cash transaction over $10,000 in a single day. This includes withdrawals, deposits, or a combination of both. In simple terms, if you move more than $10,000 in cash through a bank account in one day, the bank creates a record and sends it to the government. This is not a tax charge and not a penalty. It is simply a reporting requirement. For example, if someone withdraws $12,000 in cash, the bank files a report. If someone withdraws $9,000 in the morning and $3,000 later the same day, that also triggers the report. The maximum amount you can withdraw is not limited by this rule. Most banks allow much larger withdrawals depending on account balance and internal policies. Most people never notice this process because it happens behind the scenes. But in some cases, banks ask questions to complete the report. Now that we understand this foundation, we can look at why banks sometimes delay or review transactions. This next part is where it gets more specific. Banks are required to follow anti-money laundering laws. These rules are designed to detect unusual activity. When a withdrawal is larger than what a person typically does, the bank may review it more carefully. You might be wondering, does this mean the bank thinks something is wrong? The answer is no. It means the bank is required to verify the transaction under federal guidelines. For example, if someone usually withdraws a few $100s at a time and suddenly requests $15,000 in cash, the system may flag it for review. This review can involve simple questions, identification checks, or a short delay while the transaction is processed. In Walter's situation specifically, this is why the bank took additional time. It was not denying access, it was following required procedures. Now let us look at another important detail. There is also something called structuring. According to IRS enforcement rules, structuring means breaking up a large transaction into smaller ones to avoid the $10,000 reporting threshold. For example, withdrawing $5,000 one day and $5,000 the next day to avoid reporting may be considered structuring if done intentionally. You might be wondering, is that always a problem? The answer is that normal activity is fine, but intentionally trying to avoid reporting can raise concerns under federal law. This is why banks sometimes monitor patterns, not just individual transactions. And finally, this is the piece that ties everything together. Banks are not restricting your money. They are following federal reporting and monitoring requirements. The typical outcome is simple. The transaction is processed, a report may be filed, and no further action is taken. The maximum withdrawal depends on your account and bank policies. The typical experience is a brief delay or additional verification when the amount is large. One thing worth understanding about this topic is how it connects to Social Security and retirement income. When withdrawals come from accounts funded by retirement benefits, those transactions are still subject to the same reporting rules. For example, if someone withdraws a large amount from savings built from Social Security income, the reporting requirement still applies. This is not a separate rule for seniors. It is the same rule applied to all account holders. This is not something to worry about, just something to understand so you have a complete picture of how your financial activity is handled. Before we finish, let me answer 3 questions that come up most often about this topic. Question 1. Can the bank stop me from withdrawing my money? Answer. In most cases, no. If the funds are available in your account, you can withdraw them. However, the bank may ask questions or take time to process large cash requests. Question 2. Do I have to pay tax if I withdraw more than $10,000? Answer. No. Withdrawals are not taxed simply because of the amount. Taxes depend on income, not withdrawal size. Question 3. Is it better to withdraw smaller amounts to avoid reporting? Answer. The reporting requirement is simply a record. It does not create a problem by itself. Trying to avoid it intentionally can lead to unnecessary complications. Everything we covered today applies generally, but your specific situation may have details that change how these rules apply to you. The most reliable way to get your exact answer is to visit irs.gov and review reporting guidelines. You can also call your bank directly and ask about their withdrawal policies. For broader financial and benefit-related questions, you can use benefits.gov. These resources are free and official, and they will give you answers specific to your situation. One factual note before we finish. The IRS does not call demanding payment or questioning your bank withdrawals by phone. They do not ask for gift cards, and they do not threaten action through text messages. If you receive communication like that, it is not from the IRS. You can verify any IRS-related question by visiting irs.gov directly. I am curious, was there a specific part of this topic that you found unclear before watching this? Leave it in the comments. The most common questions become future videos. That is how the $10,000 withdrawal rule works, explained as clearly as I can put it. If something is still unclear, the comment section is open and I read every question. If this was useful, share it with someone who had the same question. I am Andrew. I will see you in the next one.